And so, Tiku, you said things are moving very quickly and it's hard to know where to prioritize. But I guess my question for the two of you would be, where is this going? I mean, when you look out to the future, knowing that you can't really predict, but given what you can see, given the trajectory, what would you predict for the next 3 to 5 years? Tiku, let me start by asking you that question.
It's the fun, futuristic question, you know? So as I think about the industry and in personal lines specifically, I think the one thing I'm confident in is that we will continue remaining a low interest category for consumers. No matter how much disruption there is that we try to inject in it. And what I mean by that is, like, consumers don't want to spend their time thinking about auto and homeowners insurance on a daily, weekly, or monthly basis. You know, that shouldn't come to a surprise for industry, but they really don't, right? So this doesn't mean that insurance companies can't provide value adds to their customers, like safe driving habits that are, you know, kind of served up based on the monitoring of the driving behavior, or on the homeowner side, water loss or theft mitigation. But, you know, let's be honest, consumers don't want to think about a large bill they pay in the hopes of never having to use what they're paying for, right? So with all that said, I think the industry absolutely will change. Climate change will impact property line segment even more than it does today. Autonomous vehicles and infrastructure improvements are going to mean different risk profiles across auto and homeowners. Virtually everything, I think, will be digital. There will be automated loss reporting. There's going to be home monitoring devices that are actively going to be mitigating losses before they happen. And we'll likely see higher severity with an offset in frequency. It's not clear to me whether that severity and frequency will completely offset each other, but that's one of the things that you know, I would say is coming our way, right? Now, if you think about it, though, repairs are still going to need to be made. You know, homes are still going to need to be rebuilt once, you know, a tornado has occurred, right? So insurers are going to have to figure out, how do they add value into the process to remove friction? And Karlyn, you spoke about this really on your first slide in terms of how it's evolving, right? So right now, most view their responsibility ending at cutting that check, right? But if for a homeowner who just lost their home as a result of a tornado, a check is only one of the important issues they're dealing with right now, right? So while the four corners of that insurance contract are still going to dictate the coverage, I think carriers and agents are going to try to figure out how to add more differentiators for their customers. Otherwise, you're just going to risk becoming this undifferentiated commodity where price is the only distinguishing feature. And that's a losing proposition for the industry.
Yeah, I completely agree with you. John, I'd be interested in your perspective as well. When you look out to the future over the next 3 to 5 years, what would you predict?
Yeah, I wish I was that good, but I'll
the industry pundits.
I'm going to take the liberty of sort of extending that to a 10-year view, and I'm going to let history help me as a guide here. You know, earlier in the conversation, we talked about sort of the big changes in personal lines, and I'll just share a perspective because I was there at the time. You know, in 1995, if you think about personal auto, online quoting really didn't exist. It was just getting started. Credit scoring was just getting started. Pre-fill wasn't there yet. Multi-tier rating programs weren't there yet. The ability to automatically ingest a motor vehicle record and a claims history was not there yet. Mostly this was manual ordering a report. It would come back and a customer service person would look at the report and key in the accident or the ticket for the surcharge. That was 1995. By 2005, that had all changed. Everything I just talked about was completely automated. And Tiku talked about, you know, the big change being the theme of automatic data ingestion, but it was more than that. It was the shopping online, shopping with a smartphone, much more sophisticated rating programs that leveraged credit, many other variables. So now here we are in 2021, and as I look at this decade, my expectation is that if we're lucky enough to sit here in 2030 or 31, we'll see that change in in commercial lines and maybe even more. And the reason is because the opportunities and the complexity are much bigger. And so my prediction is that we'll look back and say, wow, much of commercial lines is now automated. There's more self-service. There's much more data. It's not just traditional data that we're thinking about. It's computer vision from images. It's data extraction from social media for behaviors. Yeah. It's all the things we're talking about for efficiency, the customer experience, sharper underwriting and pricing, not to mention what's happening on the claim side. So I think the big transformation that we saw with personal, I think we're just at the beginning for commercial. And it's going to be an interesting time to be part of that, for sure.
And I think it's interesting too. I mean, the role of the chief underwriting officer has really changed because in addition to all the things that they've done in the past, they now have to understand technology and they have to be willing and able to turn on a moment's notice. I mean, you think about the pandemic, for example. You know, after the financial crisis of 2008, 2009, things changed dramatically. The gig economy came about, right? Airbnb hadn't existed really before that. And so out of every great crisis comes new exposures, new opportunities, new things that underwriters have to deal with. And my guess is that out of the pandemic, we will also see a wide variety of new opportunities for coverages, but also a wide variety of new things that need to be underwritten. And so the role of the chief underwriting officer, it becomes quite a challenging one, understanding the traditional view, understanding technology, dealing with the agency issues, and of course, trying to predict the future. And so when you think about...
If I could just comment there, I think you're talking about a cultural shift, among other things, that it's not just the chief underwriting officer, it's the underwriters at the desk who traditionally in a commercial lines role had that relationship with maybe they had their underwriting assistant literally next to them. They were in the same town and met the broker, and now in a sort of a remote work environment, and now it's global. Many people partner with companies like Genpact and work's done all around the world. We need to be more culturally comfortable with remote working. And not only that, with digital tools that are going to help me as an underwriter make decisions, whereas in the past, I knew my broker, I knew my line of business, but now I've got to take advantage of data and analytics that in the past I didn't have, nor did I think I needed them. Well, now I need them. So it's a cultural thing.
Absolutely. Absolutely. And so if you guys think about the journeys that you've been on, and this is going to be my last question for you guys, as you think about the challenges that you have seen and have faced and have gone through as you've been making this transition and as you continue to make this major transition, what are the top three pieces of advice that you would give to others? What are the things that you have learned that you can help others think about? Don't do this or make sure to do that. And Tiku, let me start with you.
I think for the three advice, first I'd say help your organization really address a paradox that's going to exist, which is you got to invest in digital, but you simultaneously have to reduce costs in other areas, right? So all too often, companies embark on this multi-year IT transformation only to find that it took too long, it cost too much, and you end up with more systems than you started with, right? So you got to have, as you're making an investment, you've got to go ahead and take costs out in other areas, and you just got to be mentally there, and you got to move fast on that. Second, I'd say you got to figure out how do you balance your strategy with external and internal talent acquisition and development, right? There's a healthy mix that needs to happen from both externally and internally, and you just got to develop that muscle surrounding people, you know. And then the final one, and it's probably, you know, just as important, if not the most important, is really putting points on the board, right? So you have to measure progress along this journey and create tangible milestones you can point to. There's no concrete destination for this journey that people are embarking on, right? But you have to be able to, as a leader, be able to demonstrate the impact of the strategy back to the P&L, right? And all too often, the companies just kind of have these aspirational goals, but then they can't pinpoint them to the results. So put points on the board.
Yeah, excellent. And John, how about you? What kind of advice would you give to others?
Yeah, so I guess my three, I agree with everything Tiku said, but I'm going to make his last one my number one because I really like that one, which is you've got to have measurable outcomes. But really, my next one comes before that, which is you have to be really clear about what your strategy is. And I talked about this, one of the prior questions was, what is driving your strategy? Is it, no matter what happens, I've got to drive cost out of my process because I've got tremendous growth goals and I can't scale and be competitive. That's my primary goal. Or is it, I'm in a market where I just need to be a much better underwriter. I need to take advantage of better data analytics because we're not the best in the business. We don't have the best products. We don't have the best prices. We don't have the best underwriters. So be clear about your strategy. And number two, then going back to Tiku's, is you've got to have measurable milestones and outcomes. And then I think this is the most important, which is get started. Again, if history is a guide, there will be innovators and then fast followers. The problem is too much of the industry waits. And there are lots of examples of that where companies, and I think you were referencing one of them before, was very early in their adoption of credit scoring, and they ate the lunch of most of their competitors for about 10 years until the rest of the market figured out that credit scoring and auto insurance made a whole lot of sense, and they could really take advantage of that. So, that's just one example, but getting started with your strategy, because it's going to take a long time. Those are my
great advice.
thoughts. Yeah.
That's great advice.